We're proud of you at Charter College. After all, you've chosen education as your pathway to success. In addition to preparing you for a career, we're here to make sure you're well educated about student loans. This presentation will guide you through the ins and outs of federal student loans and repayment options, so you can stay focused on your studies, graduation, and your career development. Our student academic advisors, education loan specialists, and entire financial aid department are here to help you every step of the way. If you have any questions or just need a little help, please do not hesitate to ask. First, let's review the basics of what a federal student loan is and how it works. As you learned during enrollment, a federal student loan, quite simply, is a loan that must be paid back with interest. Unlike a grant such as the federal Pell Grant, which is financial assistance that doesn't have to be repaid, a federal student loan must be repaid even if you do not complete your program, aren't satisfied with your education, or are unable to find a job after graduation. With a federal student loan, you have a 6-month grace period when no payments are required. The grace period begins the day following your last date of attendance. At the time of enrollment, you should have completed federal student loan entrance counseling. It is a federal requirement that you complete this online tutorial prior to obtaining a student loan. You should also have received a form that looks like this. It's a financial aid estimate that outlines the type of funding that you will be using to pay for your education. You should also have completed the free application for federal student aid, or FAFSA, form during enrollment. The FAFSA has to be renewed each year, so if you will not graduate before July 1st, you will have to renew your application. Your eligibility to receive a federal student loan is dependent upon you maintaining satisfactory academic progress as defined in your student handbook. At Charter College, our financial aid department is eager to help guide you through the whole process of getting and maintaining a federal student loan. Now, let's review the types of federal student loans available. One type of loan is a federal subsidized loan. Eligibility for a federal subsidized loan is determined through a financial need calculation based on the information you provided on the FAFSA. No credit check is required. Here's how these loans work. The U.S. Department of Education pays the interest on a direct subsidized loan while you are enrolled in a school a minimum of half-time and for the first 6 months after you leave school, referred to as the grace period. Once you've completed school and your grace period has expired, the loan will begin to accrue interest, which you are responsible for. The interest rate on a subsidized loan is fixed. However, the rate is set annually for new loans. Check with an education loan specialist for the most current interest rate. Another type of loan is the federal unsubsidized loan, which is not based on financial need. All students may apply for this type of loan. No credit check is required for this type of loan either. Here's how a federal unsubsidized loan works. Interest begins to accrue as soon as Charter College receives a payment. Although not required, you can make interest payments on your loan while you're in school and during the grace period to stop interest from capitalizing. The interest rate on an unsubsidized loan is also fixed and updated annually for new loans. A third type of federal student loan is called a PLUS loan. This is a loan that parents can get to help pay for a dependent student's education. A credit check is required for this type of loan, and sometimes a cosigner may be required. Here's how a PLUS loan works. Interest accrues for the life of the loan. Payments begin 60 days after the loan is disbursed. If the student is in school at least half-time, the signer of the loan may request to defer the payments. Because we're committed to helping you succeed, Charter College is pleased to help you find the right funding solutions. Charter College Credit. Charter College Credit is a payment plan we offer to help our students fund education costs that are not covered by federal student loans or grants, referred to as a GAP. Charter College credit payments are separate from your federal loans. Here's how it works. Charter College Credit offers you 0% interest payments while you're in school. That means that every payment you make while you're in school goes directly towards your principal balance. 3 months after you leave school, interest will begin to accrue on your balance. The payment amounts and loan terms vary depending on the amount of your funding gap, the program you're in, and the length of your program. Charter College credit payments cannot be deferred, meaning you cannot postpone them or put them on hold. Also, Charter College credit may not be consolidated with federal loans. If your plan is not paid off by the time you leave school, be advised that you may have multiple payments per month when your 6-month federal loan grace period ends. Now, imagine you've finished your education journey. Congratulations, graduate! So what happens with your loan? First of all, you are required by the federal government to complete exit counseling within 30 days of completing your program. Much like the entrance counseling, you can take the exit counseling online. You may also complete it over the phone with an education loan specialist or via email. Then you will be emailed a document via DocuSign with the information you need to manage your loan payoff. An education loan specialist will follow up with you by phone to make sure you understand everything in your packet and to answer any questions you may have. If you decide to take time off from school and plan to come back, you must complete exit counseling within 30 days of stopping the program. One great resource you should know about is the National Student Loan Data for Students, or NSLDS, Student Access, a website that has all the information you need on your federal loan. On this website, you can track disbursements to the school, see what the status of your loan is, see who the servicer of your loan is, and keep an eye on the interest that is accruing. It's important to remember this website, www.nslds.ed.gov. Now imagine 6 months post-graduation, or 6 months since your last day as a charter college student. You have come to the end of your federal student loan grace period. Within 30 days of your grace period ending, you will need to start paying off your loan if you haven't started already. Near the end of your 6-month grace period, the servicer of your loan will contact you to set up payment arrangements. Keep in mind that if you are in repayment on a federal student loan from another school, that loan may not have the benefit of the 6-month grace period. In that case, you may want to consider federal loan consolidation, which streamlines the repayment process with one single monthly payment, one servicer, and just one interest rate to manage. You can apply online through studentloans.gov or ask an education loan specialist for more information. As we've discussed, student loans are not one size fits all. Neither is the way to repay them. There are several repayment plans to choose from. There's a standard plan, which gives you equal monthly payments for a period of 10 years. The minimum monthly payment is $50 and increases based on the amount borrowed. For students who have $30,000 or more in student loan debt, there is the extended payment plan. With this plan, the term of the loan is 25 years with lower monthly payments, but more interest paid over the life of the loan. Another option is the graduated repayment plan. As the name suggests, the monthly payments over the 10-year term start lower than the standard plan, but stair-step up every 2 years. The benefit of this plan is that it gives you time to advance your career to the point where you will be able to make a larger payment. With the graduated repayment plan, payment increases will never be more than 3 times the amount of the previous payment. So if a payment is $50 per month, after 2 years it will not exceed $150 a month. The monthly payment will also never be less than the amount of interest that's accruing on the loan every month. Another option is an income-driven repayment plan. The monthly payment on one of these plans is based on your income and family size and can be adjusted each year. There are several income-driven options, all with different qualifying criteria. Depending on which income-driven repayment plan you qualify for, the monthly payment amount ranges from 10 to 20% of your discretionary income. Discretionary income is defined as the amount by which your monthly income exceeds 150% of the federal poverty level. This number varies from state to state. With most income-driven repayment plans, if the monthly interest accrued exceeds the amount of your payment, you may have a monthly payment of $0. The government will even pay the unpaid interest on your subsidized loan for up to 3 years. If you make your payments on time and provide documentation of your income on a yearly basis, any remaining balance on the loan that has not been repaid after 20 or 25 years will be forgiven, including any unpaid interest depending on the repayment plan. At Charter College, we firmly believe in the importance of planning for the future. By enhancing your education, you are planning for a bright future. But no one has a crystal ball. So what happens if circumstances arise down the road that make it difficult for you to make your loan payments? The short answer is, our education loan specialists are here to help. We are your advocates and will work with your loan servicer alongside you. Our goal is to explore all options to ensure that no one defaults. Loan default, which occurs after 270 days of non-payment, is serious business. It carries some potentially hefty, long-term consequences. For instance, your credit can be greatly affected by loan default. A lien can be placed on your home. Your transcripts or diploma may not be released until the default is resolved. You may lose eligibility for any additional federal financial aid. Some professional licenses cannot be renewed if you're in default. The Department of Education can garnish your wages. You may be sent to collections and incur late fees. Your tax returns and Social Security income can be seized. You can even lose your job. We don't want to see any of this happen. Fortunately, there are ways to make sure you don't default on your student loan. First and foremost, please get in touch with an education loan specialist at Charter College as soon as you experience a challenge with your loan payment. We can help you set up a repayment plan and avoid going into default. One option is to request a deferment. A deferment allows you to postpone making payments for up to 36 months throughout the life of your loan. During a period of deferment, a subsidized loan does not accrue interest. In most cases, a deferment needs to be re-requested every 6 months. Deferments are available for specific situations such as unemployment, active military service, returning to school, some types of public service, or economic hardship for a person receiving any kind of state assistance. If you don't qualify for a deferment, you may request a forbearance. A forbearance allows you to temporarily postpone making payments for up to 12 months. With this option, interest will continue to accrue for all loan types. Throughout the life of your loan, you may request a forbearance a total of 36 months. An education loan specialist at Charter College can assist you in setting up one of these options with the Loan Default Prevention Department. It's important to note that filing for bankruptcy will not excuse your financial commitment to any federal student loan. During times of adversity, we at Charter College believe that what most delinquent borrowers need is information and a helping hand, not a scolding. That's why our education loan specialists make sure each and every borrower is helped to the best of our ability. No time limit on calls, no unanswered questions, and no blind transfers to loan servicers. We recognize this is a lot to think about, but you've already taken the first important step, getting educated about your options, and we applaud you for that. We applaud you for committing to your education, for taking financial responsibility head on, for creating peace of mind for yourself and your family, and for investing in your future. From here, it looks like you're on your way to great things.